guys, sorry for getting my times a bit mixed up, but I think we're back and ready to carry on with the next session. So this is now till 12:30, and we'll see if we can get through as much as possible in the session. However, just before we start, maybe just a commercial. You may or may not have heard by now because the final exam timetable has been sent to schools, I think. So we start on Monday, the 1st of November, which is not that far away, considering we're already in the middle of July and almost in August. And the accounting, Paper 1 is written in week 3, and that is Wednesday the 17th of November, and Paper 2 is the next week, week 4, and that's also Wednesday the 24th. Okay, so those are 2 important dates. I'm not worried about the others particularly. Okay, there are other subjects in between that you write, but yes, accounting is on the 17th of November and the 24th of November. Remember, whatever we're doing here is already in preparation for the end of the year, because you can apply it to your mock exam, you can apply it in your final exam. And I'm sure this won't be the last kind of tutor sessions that the department is providing. I'm sure there'll probably be something in September, and there may even be something at the end of the year before the exam. Okay, so you just need to make sure that you get yourself prepared for that. Okay, all right. So, are we ready to get started? Okay, so let's just finish up with the last few questions there, and then we're going to see how much of the rest of the paper we can get through. Now, remember, for paper 1, companies is extremely important in terms of the content of your syllabus. So, for financial accounting, it's going to be financial statements, it's going to be cash flow, and it's corporate governance. So that already is all of companies, and that's almost quite easily, we can say, between 130 up to 130 marks already. So don't underestimate the importance of financial statements at all. Okay. For me, I always like to look at it as being, after companies, everything is downhill. And when I say downhill, I don't mean getting worse. I mean getting easier. Easier to deal with in small chunks, because it's reconciliations, it's inventory, it's manufacturing, it's budgeting. And those are in much smaller chunks than companies. Okay, so once you've mastered companies and you've got that behind your back, the rest is, I think, plain sailing. Or it means that's where you can score marks even easier than in companies. Which means if you've got companies packed and you know exactly what you're doing with cash flow and with financial statements, my word, that's half your battle won. The rest should get even easier. Okay, but again, it's going to be different for each person. So work on your own strengths, your own strong points, and maximize that to your best advantage. So see where you can gain your marks the most. Okay, because at the end of the day, it's making sure that you get the maximum total out of 300. Okay, out of the 150 for paper 1, out of the 150 for paper 2. But in other words, we're saying it's almost impossible to fail accounting. Please don't try and prove us wrong. It is a lot easier than you think. You know more than you think you know. Okay, so don't knock yourself down. Look at what you do know and capitalize on that. Okay, enough commercials. Let's get back to business for now. So, we're looking at the rest of that. Okay, so compare the dividend payout rates of both companies. Explain why the directors of each company decided on these payout rates. And again, when we look at dividend payout rates, it's always as a percentage of EPS. So, the two that go together would be EPS and DPS. The other two that go together is NAV and market value. Okay? So, like they say, love and marriage go together like a horse and carriage. So, EPS and DPS. NAV and market value. Those two usually go together. Okay. Then if we look at 5.3.5, Noah says that the dividend of 110 cents per share he earned from Lulu Limited is better than the dividend of 200 cents per share from Cocoa Limited. So he's just looking at the cents. We need to go back to the information to see why that's incorrect. Then we have to comment on risk and gearing of each company. Quote, 2 financial indicators. So for risk and gearing, your gearing ratio is your debt equity ratio. The other one is your return on total capital employed, ROTCE. So when they say, quote, financial indicators for risk and gearing, most of the time it's your debt equity ratio, which is borrowed capital is to owed capital. In other words, non-current liabilities to shareholders' equity. And the return on total capital employed. And remember, for all of those, you gain, especially the return on total capital employed, you're going to compare that with your interest on your loan. So if it's high risk, in other words, if the debt equity ratio is increased, it's not necessarily a bad thing. Because when you work out your return on total capital employed, that percentage is a lot higher than your interest on the loan. Then it means the borrowed capital is working in their favor because they're still making a profit on that. Okay. And then the last one there, Noah wants to buy shares in Lulu Limited at the current market value to become the majority shareholder. Calculate how much Noah will have to pay for the shares that he needs. So, again, they give us the current market value, so we know what we are going to multiply the number of shares by. And remember again, for majority shareholder, it's anything above 50%. 50% would mean it's equal to the other number of shares, but majority would be the 50% plus, can even be 1 share, plus another 1%, plus another number of shares. That would make the person the majority shareholder, okay, or the major shareholder. All right, so 4, 8, 12, 18, 22. So let's see if we have another few minutes. Let's check after 10 minutes how far you get with each of those, and then we'll get back to the memo. And for these, I'm going to go straight to the memorandum so that you can see exactly what exactly they want you to say. and what would earn you the marks. All right, so I'll chat to you soon. Hi guys, hope we're making some progress and that it's not too bad. Again, even though the time allocated according to the marks is like 15 or 18 minutes, it would be good practice for you maybe to time yourself to see how long it takes you to actually answer the questions. Because remember, at the end of the day, you're going to be working out where can I gain time and where am I going to spend the most time. So sometimes with commenting, if it's 4 marks, then they want you to make at least 2 comments or points with figures. Okay, and sometimes where there's more marks allocated, then there's more calculations involved. But if you know what to calculate, it shouldn't take you that long. Okay, so again, just make a mental note of what you're struggling with and what could possibly be your strong point. Okay. Are there any of you who have finished already? Or are we still struggling with that? Okay, because you've been busy for almost 10 minutes, I guess. Okay. Okay guys, I'm going to go to the answers now, and if you didn't get there yet, just take note of what they kind of expected you to answer or how they expected you to answer and where you'd get the maximum marks. Okay. So, it says compare the dividend payout rates. And remember I said the dividend per share is always, the payout is worked out as a percentage of the EPS. Okay, now here they accepted the cents as well, but most of the time they expect you to work that out. So how did we get the 40.3%? It's 110 divided by 273 times 100. That would give you the 40%. In other words, of the EPS, they paid out 40%. 40.3. So if that was what they paid out, the rest that stayed behind is what they retained. Okay, so that means if we minus the 40.3% from 100, it gives you 59.7%. Okay, so that means that 59.7% is what they retained. And why would they be retaining? For future growth or expansion. Okay? Or, you can see there, this is to benefit the shareholders through NAV and share prices. How would they benefit through the NAV? Because remember, whatever they retained, if they retain more profits, then that means their retained income is more. If their retained income is more, their shareholders' equity is more. If their shareholders' equity is more, their NAV is more. Because what is the ratio for that? Shareholders' equity over number of shares issued. So as soon as that increases, it means the net asset value per share is going to increase. Okay. So that was for Lulu. For Cocoa, remember all this information is from the question paper that they gave you. Cocoa, the EPS was 200 cents, but the DPS was 171 cents there. Okay. So the dividend per share was 200 cents. In other words, that's what they paid out. My apologies. So let me just get this right for you. The DPS was 200. The EPS was 171 cents. So your 200 cents over your 171 cents times 100 gives you 117%. So it means they are paying out more than what they actually have. So why would a company decide to do that? And possibly to keep their shareholders happy. Okay, and like they say here, it's to reward shareholders for low dividends in previous years. Or they don't necessarily need to invest more in the company or plow back because they don't have any plans for growth. Okay, so any of those there. But the main thing here was to compare what Lulu is paying out as a percentage and what Cocoa is paying out as a percentage. Now, it's not necessarily a bad thing if they pay out less as a dividend. It just means they're retaining more. Okay, and there's nothing wrong also with paying out more and retaining less. But whichever way, the shareholder is still going to score. Okay. Then if we look at the next one. Noah says that the dividend of 110 cents per share earned is better than the other one, than the 200 cents. And you have to give 1 point to prove that is incorrect. Okay, so if you look at how marks are allocated, 1 for the explanation and 1 for comparison with the figure. No marks for individual or random marks stated. Okay, you had to compare the two because that's what the question asks you for. So you must compare the two. You can't just write down figures and expect to get marks for it. It ain't gonna happen. Okay, so now you have to compare the two. The one was 200 cents and the other one 110. So 200 cents minus the 110. So 90 cents more per share was earned in cocoa, or he earned 90 cents more per share in cocoa. So for all of that, you have to say, you have to quote the figures, you have to get the difference, and that's part of your comment. So if you just said he earned 90 cents more per share in cocoa, it was 4 marks. However, you could also illustrate that in terms of a percentage. So in Lulu, he earned 110 cents on a share which cost him 700 cents. So he earned 16%. But in cocoa, he earned 200 cents on a share which cost him. So because we're looking at cents there, we would convert the amount per share also into cents that he paid for it. That would be 7%. Or, so you can see it's not only one kind of answer, that they didn't only expect you to say that. They didn't only, you could have said it that way, or you could have said it that, or in total he earned dividends of so much from Lulu and so much from cocoa. And that would be your 4 marks. Okay. If we look at the risk and gearing, and they said, quote 2 financial indicators. Take note, it's only debt equity that we're commenting on. Well, that's the financial indicator, and return on total capital employed. Those are the only 2 ratios that they wanted you to indicate here. So if you said anything about ROSHA, return on shareholders' equity, that's not what they want you to comment on here. So the debt equity ratio, if you, and this information they gave you in your question paper, they gave us this information in the details. So all we had to do was use that information from the question paper and then translate that into your, or incorporate that in your answer, or use that for your answer. Okay. So, for Lulu, the debt equity is 0.8. Now that's relatively high. Okay, because it means your borrowed capital is 0.8 and your own capital is 1. The return on total capital employed is 20%. Okay, so, and that also they gave us. Which means, and also it increased. Because it was 12% and it's now 20%. So what is the comment? The business makes extensive use of loans, or the business is high risk. Because of that, 0.8:1. However, the return on total capital employed is higher than the interest of 13%. And that means their borrowed capital is working for them. So it made sense to borrow more money, because it's the return on it is still higher than, the return is 20% and the interest is 13%, which they gave you, then they are scoring. Okay, so if we, and they say it's 3 marks per company. So what do they want you to indicate there? Financial indicator with figure and comment. So, what did I say earlier in the notes when we comment? We need to state the financial indicator. We need to state the trend then, which is the figures. And that's, if you have to comment on last year and this year. And then you need to say what that means. Okay. So, financial indicator with figure and comment. That is where you will get the marks. Accept the correct figures if financial indicators are not mentioned. So there they're being nice to you. But usually, I would say, assume worst case scenario, anything else is a bonus. So if you assume that you have to state something in order to get the marks, then that is what you do. If you get the marks without saying it, that's a bonus. Okay. Then for cocoa, the debt equity is 0.2:1, and that then means it's low. Okay, so they low geared, it's low risk. However, the return on total capital employed is 10%. And what is the interest rate? 13%. Which means it wouldn't be a good idea for them to increase their debt equity ratio, because their return isn't that good. It's less than the interest on loan of 13%. Okay. So 3 marks each, so you had to say each of those for both companies in order to get the marks. And then the last one. Noah wants to buy the shares, so again, we need to look at what for the number of shares. So Lulu Limited, he wants to buy shares, calculate how much he'll have to pay for it. So 1.1 million, and that's the total number of shares. If you look at the information there at the top, total number of shares is 1.1 million. Okay, he bought 400,000 originally. Okay, so half of that plus 1 would be majority shareholding. Okay, so we need to look at what was the total number of shares and how many shares you would need of the total number in order to gain majority. All right. So half of 1.1 million is 550,000 plus the 1. Remember we said it's only just 1 that you need to get majority shareholding. Or if you said 1% extra or 51%, then it can be 51% of the total minus whatever he already has. So if you look at the number of shares, he's already got 400,000. Okay, and if you minus that from the majority times the price per share, and that also is the current market value per share, because that's essentially what he would then have to pay. That would then give you 1,425,009 rand and 50 cents. Okay, so there you're going to get 2 marks for getting the correct number of shares times 950, another mark. That's the price per share, and then the total. And of course, this total here, one part of that has to be correct. Either the price or the amount. Okay, so it's either 50% plus 100, 51% or 14% times that, or 15% That's then, so any of these calculations would have been accepted. Okay, and that then gives us the total of 70. All right. So you'll see that this total was 70 marks, and the only reason for it being so many marks or being put together is that it came from one of our past papers of 3 hours. So now remember, going forward, we have 2 papers, which means there could be shorter questions. So cash flow could be separate, and ratios and commenting could be another question. There could be two separate questions for this. But if you look at the gist of it, at the kind of things that are answered or asked for, it could be in one paper, one question, it could be in 2 questions. But the trend also with the 2 papers is now to have shorter questions. And remember, we're looking at questions that make up a total of 150. So if paper 1 is mainly financial accounting, and that is financial statements, it's cash flow, it's ratios, it's inventory. The other thing that could be included there, or sometimes it's as part of your notes, is fixed assets. So if you look at 4 possible questions, I suppose on average, let's say 3 to 4, they won't be more, maybe not much more than 50 marks each. Okay, so a cash flow question could easily be 50 marks or 60 marks. A ratios question could easily be 30 marks, 40 marks, 50 marks. Okay, but if that is where you are going to gain your marks, then you need to make sure you know how to answer things and what is expected. And again, with regard to the commenting, we don't want pages and pages or lines and lines of commenting for 2 or 4 marks. So most of the time, the space that they give you that's allocated is sufficient. We don't expect you to put arrows and then point to another part of the paper where you had to carry on answering the question. Okay, it's hardly very long, but what you do say must be worth the marks that they are allocating. So, in other words, before the time, you must know, how am I expected to answer this question? What kind of information do I need to give in order to get the maximum marks? Okay, I hope cash flow and ratios makes a little bit more sense. And remember, the more you do the same kind of thing, the easier it gets for you. Because the more questions you work through, you'll discover it's the same kind of thing that they're asking. Okay, but maybe just from a different angle. So you'll only be doing yourself a favor if you work through question papers. Okay. Right, are we ready to carry on with the next part? So if we now look at the next question. Okay, so here we've got inventory. So again, if we just look at the total marks for the question, it's 40 marks. 40 divided by 150 times 120. And something that we have an advantage of is a little bit more time compared to the old 3-hour paper for 300 marks. So now we have 150, but we have 2 hours for it instead of 1.5. So there is a little bit of time that we have available that we can play with. So even though this one says 25 minutes, if you work that out, 40 divided by 150, if it's in one paper, times 120, which is the 2 hours, it gives us about 32 minutes. And I think it's more than reasonable to complete it in the 30 minutes. So let's just look at the questions, and then we'll see what they're asking us for. So again, at the top, it says, so there's our one-word answers. So already, if, let's say there's 4 questions in the question paper, and at least 2 or 3 of them have these short one-word answers. Remember I said you can't get a naught in accounting. There again, you just have to know your theory. So it says, which method assumes that stock is sold in order of date purchased? And we know there's only 3 methods. It's Fifo, it's weighted average, and it's specific identification. And 3.1.2, which method divides the total cost of goods available for sale by the number of units. And then the last one there, which method is used for very expensive, individually recognizable items. Okay, and I think clearer than that it can't get. Okay, so 3.2 says, JJ Fashion House uses the periodic system. Janine Naidu owns the business. And remember with inventory again, with inventory we can test both FIFO and we can test weighted average and specific identification in the same question. Okay, there would then just be subsections. So again, reading, extremely important. Make sure that you know which information you're looking at for which question. Because sometimes let's say most of the time it's sporting equipment that they work with, but it doesn't have to be. But it could be soccer balls and soccer jerseys. It could be golf balls and golf clubs or whatever. But those are usually 2 different items of stock that would then needed to be valued. Remember, we have stock systems and we have stock valuation method. Stock systems is either perpetual or periodic. Stock valuation is then our FIFO, first in, first out, our weighted average, and our specific identification. So, of the 3, specific identification essentially is probably the easiest because there's a specific price allocated to a specific item. So, number of items times price per item. Weighted average is the one, believe it or not, that we deal with in more than one different section of the work. Okay, it comes across in financial statements when we have to work out the average price, total share capital divided by number of shares. Okay, that's similar to weighted average. In manufacturing as well, and in inventory. So weighted average essentially number of items purchased divided by, and when I say number purchased, the total rand value divided by the number of items that was purchased. Now remember that the number of items is the net amount. And the net amount would be your opening stock plus the purchases minus returns. Okay. So the principle remains the same, but again, you've applied it somewhere else in another section. And then FIFO, also easy. We look at the last number, because if it says first in, first out, whatever we bought first, we've sold already. So whatever we have left is at the latest prices. So we first go to the last number number of items and price that we've purchased, see how many items are included there. If we still have more left, then we go to the next price. Okay, but again, it's just the calculations, and it just means you need to look for those figures. It's not that difficult. Okay. Right, so that would be with regard to your stock. So what do they usually ask you for? So you'll see there the value of closing stock and the gross profit. Calculate how long in days it will take to sell the closing stock. So this year is your ratios. Okay, how long will it take to sell the closing stock? Remember with our ratios, we have two stock ratios. One would be your number of days that we have. It's the stock holding period and the stock turnover rate. How quickly do we sell it? And how long would it last? Okay, and the one is just the same ratio, we just invert it to get the other. And then Janine is considering a change in the method of valuing stock. Value of closing stock using FIFO, state one advantage. So again, here when we look at changing the method, it doesn't mean that one is more correct than the other. I think one is maybe just more realistic than the other. And the one would give you a higher cost of sales or a different cost of sales and a different gross profit. And the other one would give, so if your cost of sales is higher, remember gross profit is sales minus cost of sales. So if your cost of sales is more, then your gross profit is less. Okay? If your cost of sales is less, then your gross profit is more. So they always just want to know what effect it has on the gross profit, not on the net profit. But if you look at that periodic calculation of cost of sales, it's opening stock plus your net purchases, carriage on purchases, less your closing stock. So if your close, and this is where the valuing, the method comes in. If your closing stock is valued higher, then it means your cost of sales is less. If your cost of sales is less, your gross profit is more. However, if according to the value of your closing stock, that's less, then your cost of sales is more. That means your gross profit is less. Now there's nothing wrong with any of those methods that we use, because the one eventually cancels out the other. Okay, because either your trading stock, your inventory in your balance sheet, your statement of financial position is going to be more, or it's going to be less. On the other hand, your gross profit is either going to be more or less. Okay, so as long as we understand how to calculate, and there's nothing wrong with any particular method that is used. as long as it's consistent. So, and there is a question there, or saying that Janine is considering a change in the method of valuing stock. There's nothing wrong with wanting to change it. However, if you change from Fifo to weighted average in the same year, you're not able to compare it to a previous year. So I think for most businesses, consistency would make a lot more sense and allow them to compare to previous years. Okay, so we need to so that is information A. Then information B is something different again. So the owner is concerned about theft, calculate the number of jackets stolen, give 2 solutions, and then stock levels, and he's concerned with figures. So what do we essentially ask you for in more than one section or in the whole question? You must know how to work out the value of closing stock. So when we say value, we mean rand value. Okay? Any method, whether it's FIFO or weighted average. So we're going to ask you to work out the closing stock. We're going to ask you to work out the gross profit. And for gross profit, you must know how to get to cost of sales. We could ask you to work out the number that is missing, okay, or stolen. So how do we know how much we're supposed to have? We know what our stock was, we know what our purchases is, and that's our total that we purchased. Then we look at our sales. That's what we've sold. So the difference between what we've bought and what we've sold is what we should have left. If we don't have that left, then it means there's something missing. Okay. I think I've spoken enough now again. So I'm going to give you some time to work this out. So if we look at the first one, let's just do information A. So again, it's about 23, so it should take you about 15 minutes. However, I still believe it should take less than that. So let's check with you after 10 minutes, how far you are, and then we'll start looking at the answers. Okay, so I'll chat to you shortly. So 12 o'clock, we'll check again. Okay. I hope we're done with some of that already. We're going to look at how we got to calculating the value of the closing stock. Okay? So if we look at our information there's how do we get the value of the closing stock using the weighted average method? For weighted average, it's going to be our opening stock plus the purchases minus the returns over the total number of units. So it's the rand value divided by the total number of units. Now again, the total number of units would be the opening stock plus the purchases minus the returns. Okay, so it's that 3390 minus your 130. So if we look at the workings, what did we say? It is our 124,500, that was our opening stock, plus the purchases, minus our returns. Okay, it's that amount over your number of units. Now, what did we say the number of units was? It was the 3390, which was your opening stock plus purchases, minus the returns, which is 130. Okay, so if we were to work that out, so the 124,500 plus that minus that gives you 1,858,200 over that minus that 3,260. So if you divide that, you use your calculator, it gives you 570. Okay, so that's your number of units. So remember, we're trying to get the total calculate the value of your closing stock using the weighted average. Sorry, I think apologies, that's your weighted average price. Okay, because that divided by that gives you the weighted average price. So that times the number of units that is left. So 570 times how many units are left? 380. So the answer that we're looking for is that times that gives you 216,600. Okay. Is that what we got? Then we had to work out the gross profit. So how do we normally get to gross profit if it's periodic? So it's your opening stock, your purchases, and with this we mean net purchases, and then we would minus the closing stock. Remember, if there was any carriage on purchases, it would be included here. So your opening stock then is 124,500. Okay? Your net purchases is the 1,813,000 minus the 79,300. 1,733,700. We add those two together. It gives us 1,858,200. Less your closing stock must give you cost of sales. Because remember, we're first trying to work out cost of sales before we can get gross profit. How do we get cost of sales? It's your opening stock plus purchases, carriage on purchases, less your closing stock would give you cost of sales. Then, sales minus cost of sales gives you gross profit. So what is the closing stock here? And remember, that is what we worked out there. That's your closing stock. So, minus that amount there, 216,600, must then give us our cost of sales. So that minus that gives you 1,641,600. So this isn't the answer yet. This is just the cost of sales that we need to work out the gross profit. So how do we get to gross profit? Sales and cost of sales. So what is your sales? They gave us the sales, 2,764,800. And your cost of sales we've just worked out, 1,641,600. And that would then give us our gross profit. 1,123,200. That's your gross profit. So that was what we had to work out. But we had to know how to get to cost of sales, and we can only get this after we've got our closing stock. So it was 6 marks and 4 marks, so we already have 10 marks. And then calculate how long in days it will take to sell the closing stock. Okay. So, that is your closing stock over your cost of sales. $600 over, you've worked that out, 600 times number of days, so times 365. And that gives us okay. Right. I'm sure we all managed that. And again, inventory is, it's not that difficult. Somehow it isn't always answered very well in a final exam. But only you can remedy that. Okay. If you look at how simple it is to figure things out. But again, you have to know what information to use in order to get there. Okay, are we ready to move on to the next one? So now let's look at 3.2.3. Janine is considering a change in the method of valuing the stock. Calculate the value of stock using the Fifo method and state one advantage of using the Fifo method. So, how would we look at how would we do FIFO? So, remember, for FIFO, we would start with our closing stock is 380. Now, if we say first in, first out, then whatever we bought first, we sold first. So if we look at the last items that we bought, and the cost there was 610. Okay, so. And previously it was 580. So they say in January we bought 400. So even though our closing stock is 380, we need to look further down and see the returns from the January was 130. So even though we bought 400, we returned 130 of that. So essentially that means of the January, we only have 400 minus the 130, there's only 270. So of the 380, remember we said we take the last purchases first, because whatever we bought before that was sold. So we have 270 then at 610. And then there was 380 left, so 380 minus the 270 would then be 110. So we're going to have, so there we're using 610 and we're using 580. So if of this 400 there was only 270, so it would be 270 at 610. We have 380 left. 380 minus 270, 110. So 110 would be at the 580. Okay, so with FIFO, we always look at the last number of units that was purchased, and we look at that price, and then we go to October. If there was still more left and we had to go to May or the previous one, then that's what we do. But we always work then from the last that was purchased, because that is the current price that is still left. Whatever we bought previously, that's gone already, that's sold. So if we look at if we now look at what we're calculating. So we said it's 270, and we all know we got the 270 times the 610. And then it's 110 times the 580. And we work out what each of that is, because that gives you 380. So it's first that amount at 610, and then the 110, because those two make that up, at the 580. So if we multiply that out, it gives us 164,700, and the other one is 63,800. So the total of those two added together would give us the value of the closing stock, and that's what they want in rands, 228 500. We all get that. Then it was just one advantage, and an advantage would be it's more accurate, it's more realistic, as your stock is valued at its current prices. It's valued at the latest prices, as we can see, and that then is more realistic than maybe the May's price or the October's price or average price. Okay. Okay, so if we now go on to the next one. Okay, it says refer to information B, which is the jackets. Okay, and calculate the number of jackets stolen, give 2 solutions, and then the stock levels. So if we now look at the jackets, so what did we say? How do we know what we are supposed to have left? It's usually the number that we've bought minus the number that we've sold. So what did we have available for sale? That's 8260. That's your opening stock plus your purchases less the returns. That's the total. How much of that have we sold? Okay, so and now you just need your calculators. So it would be your 8260 minus whatever we sold, 5020. So we should have left 3240. Okay, but how much do we have left as closing stock? 2980. So the difference then between the 3240, remember how did we get that? The units available for sale minus what we've sold. That should give us what we have left. However, we only have that left. We should have 3240 left. But we've only got 2980. So 3240 minus 2980, 260. Pops your uncle, that's it. So, and how many marks was that? 4 whole marks for that easy calculation. So it's your, again, number of units available for sale, that 8260. Minus your units sold, because this is what we actually sold. So the difference between those two is what we are actually supposed to have left. However, that is our closing stock. Remember, this is similar to your trading stock. So we know on the debit side, whatever we've bought. What do we have on the credit side? The cost price of what we've sold. What does that balance give us? What we are supposed to have left. However, when we do a physical stock count, that is when we see how much we actually have left. Exactly the same principle here. So according to a stock take, there must have been, the units counted was only 2980. But we should have had more. That means if there's a difference, that must have been the missing ones or those that have been stolen. Okay, not so bad. And then, what else did they ask us there? Two solutions to solve the problem. And again, maybe just more regular random checks, stock checks, improve security in terms of access, make sure only authorized people or personnel can work with it. Okay. And then what else did they ask us for? I think we're probably just going to be able to finish this, and then maybe we'll just talk about manufacturing if we can, just in case we don't get to it. But again, hopefully we're not panicking that we didn't get through everything, and the memorandum will be given to your, or will be distributed to your teachers, and if there's, I'm sure it's one of the, I wouldn't say less important, but easier sections to work through and to manage. So again, remember, like I said, you know more than you think you know. So capitalize on what you do know, but make sure that when it comes to those heavy questions, that that's also where you can gain your marks. Okay? So let's look at the last sections here and then see what or how they would have wanted us to answer it. Okay. So that's what they're giving us. Okay, just give me a minute to get to the memo quickly, and then you can see how you were actually supposed to answer that. Okay, just give me a minute. Okay, so if we look at if we just look at, let's see if I can make this a bit bigger for you. Okay, those were 3 easy marks. We're just going to go through all of this now as we wrap up. Then, remember this one we've worked out. So there you can see how you would have gotten that 6 marks for your 216,600, how you got all of that there. Okay? And this calculation, remember we did that. So, you don't have to do them separately. You can just have one amount, but then that's taken into account when you get your marks. Again, if you had the correct answer, it's 6 marks straight away. No questions asked. Okay? However, if you did not, then we go back to your workings, which is why the workings are so important. Okay? Then, again, the gross profit. Remember, we worked all of that out. And how long it will take to sell. And there you can see it is continuous accuracy. So whatever figures you got for the closing stock, whatever you got for the cost of sales, that is accepted. And this year just means one part has to be correct. Okay? Then the value of closing stock. So we said it's that plus that, and that was 228,500. So that's how you got the 7 marks. So it must be that times 270 times the 610 gives you that there. The 110 times the 580 gives you that. And so one part must be correct, either the number of units or the price. If you got 228,500, it's 7 marks straight away. Okay, one advantage. It's valued at the most recent prices. It's more realistic. Higher gross profit because of higher closing stock. It's based on current market values. There they just wanted one answer. Number of jackets stolen. We've just done that now. So that's what we purchased. Opening stock plus purchases minus what I think that was our stock, minus whatever we sold, that gave us that, or we could have taken the 8260 minus that, gives us the amount, minus that gives us the amount that is. Okay, then the last two, and let's just look at the actual amounts that, or the actual comments that they wanted you to make. So, again, count stock regularly and compare against the stock records, improve security. Another one could be staff screening, tracking devices, insure goods so that you can claim on it. And then, if you look at the last ones there, the internal audit is concerned about the stock levels. So, for the stock level, you look at your stock holding period, and it just means they keeping more stock. How do they get rid of excess stock? They have a clearance sale. Order less, purchase less, in line with the demand. And then the selling price increased. The markup percentage increased. So customers might find the price of that being too high. So what would our advice be? Reduce the markup percentage, selling price, offer trade discounts, all of that. Okay, so, goodness, guys, time flies when you're having fun. So we've come to the end of the session, and like I said, it's not a train smash that we haven't finished everything, but again, my opinion is that as long as we went through whatever we did thoroughly. Okay, if there are any questions or comments, by all means indicate on the chat. However, when school resumes, I wish you all the best of luck going forward, and I hope it's going to be an uninterrupted term so that we can prepare for the trial exam or the mock exam, and that's again one step closer to preparing for our final exam. All right, otherwise I trust you've enjoyed the whole week, those of you who have attended lessons, and best of luck going forward, and hopefully there'll be another 1 or 2 sessions like this. Ideally, I think first prize would be face-to-face if we can, but that depends entirely on our COVID situation. Okay, so stay warm, stay safe, stay healthy, and all the best for your final exams. All right, thank you guys, that's all from me. Take care.
Thank you so much indeed. That was a fantastic session. Thank you very much.
Pleasure.
Okay. can close the presentation.
Okay, let's